Hi, welcome back to CMG Aura Space Forex Lessons. This is a special class on candlestick and chart patterns. So we have candlestick patterns and we have chart patterns. So I actually wanted to address this fully in a playlist called Financial Literacy and an Introduction to the Financial Markets. But I think time being of the essence, and I think that is going to take a long time for me because I'm still preparing that slides and I'm not done yet. But because trading, in fact, we do not have time to waste. I decided to give you a head ups, right? A head up in this short video. So if you know, or in fact, if you have been on this page for quite a long time now, you should know that we have addressed candlestick patterns in the advanced playlist. So we have beginners, advanced, and then we have what? The intermediate. Sorry. So in fact, candlestick patterns has been addressed in what? In the intermediate what class playlist. Now, because I have decided to treat chart patterns, in fact, the foundation of chart patterns is actually uh, taken from what? Candlesticks. So what I mean is candlestick patterns is the foundation of chart patterns. So if you don't know your candlestick patterns, you wouldn't understand what is chart patterns. So for me to bring everything into a short video for you to understand maybe part one or part two, or in fact the two, I've decided to treat them. But what I'm going to do in this video is that I am not actually going to waste time on candlestick patterns because we have already addressed that in what? In the intermediate class. So if you don't know what are the candlestick patterns, please watch that in this video's description. Then after that, you come to what? The chart patterns. So now I also urge you to do one thing for me. Now, I know in trading, in fact, in this journey, you need to make some sacrifices and then you have to be determined to learn, right? So, what I would address, or in fact, our advice is that take a screenshot of these patterns, especially these candlestick patterns. And you take screenshots and then save them as your screensaver or you're on your phone, on your PC, and then please, for the, I know I'm going to say something which is funny, but please, you have to make sacrifice. So your girlfriends, as you and your boyfriends, that you have them as your screensaver, your wallpaper. I would advise that at least for some time, this is what I want you to do. In fact, this is what I've done, and it has really helped me because these patterns you have to memorize them. You understand? You have to memorize them for you to actually get them. If you don't memorize this, you find it difficult. So, and these patterns actually found the foundation of what? Trading. So I will urge you to take screenshots. So I'm going to go through slowly, scroll down slowly through these candlestick patterns, right? So you go through and then save them and then you learn. And then we move to what? The chart patterns. That's where I will actually have time and address them. So this is what I'm going to do. So when it comes to candlesticks, in fact, the anatomy and psychology, we know we have bullish candlestick patterns, and then we have bearish candlestick patterns. We have the bullish being on the left, so they are in the green shade, the green area, and then we have the bearish candlesticks in what? In the brownish area, right? So any candlestick falling within on your right is bearish, and then on the left is what? Is bullish. Now, in these candlestick patterns, they are made up of what? The first one is what? Single candlestick patterns. So it means that your focus should be on what? Because it's bullish, your focus will be on the what? The bullish candlesticks, right? The bullish candlesticks, and then the single bullish candlesticks. But they are just giving you patterns so that you memorize them and understand then where they are important. I will actually address the anatomy in the video list or the place that I'm going to do to come. Yeah. So that is it. So we have the bullish, we have them, just keep them to memory. And then if you want the understanding, the anatomy, the psychology behind them, you should watch the intermediate class. So that is it. We have the single candlestick patterns. We have the double candlestick patterns, right? We have the double candlestick patterns. And then we have the what? The triple, right? The triple one. It means that the candlestick patterns are made up of 3 candlesticks. A pattern is made up of 3 candlesticks. In the single, they are made up of what? One candlestick. Even though they are being represented by 3, the focus should be on the what? The bullish candlesticks. For instance, the bullish aspect in the single one. Yeah, your concentration should be on the bullish one. When it is the bearish area, your concentration should be on the left, right? So when it comes to the double also, double candlestick, that means the 2. Your concentration is on the 2, not only 1, the 2. So that is it. Now, when it comes to the triple candlestick patterns, we also have 3. They've been made up of 3 candlestick patterns. So that is it. This is very important. If you don't get this or you don't understand this, in fact, you may know, no matter how good we are with your technical analysis, you may not be able to trade successfully. So this actually makes things convenient and easy, right? Keep them. You should have the graphical representation in your head, in your mind. So that is it. Then we now, if you don't get this, please come down here. They'll give you the basis of it. So every candlestick pattern or every candlestick has some names, parts of them, right? For you to identify if it's bullish or bearish. But the color that most of the traders are abreast with or conversant with is what? The red and then the green, right? The red being the bearish and then the green being the bullish. So that is it. And then we have some doji, the spinning top, and then marubuzu, right? So that is it. So with that being said, let's move to the very important aspect of this video, which is called what? The right, the chart patterns, right? The chart patterns. So for disclaimer, in fact, for disclaimer, and I have to give some shout out to what? FTMO Pro-Firm platform, right? So I took some course on their site, and then I was gifted with this material, this educational material. They gave me this. In fact, it was a gift. So I took some course, and then I was gifted with this, right? Now, the reason being that in the intermediate class, right, I've addressed everything, especially on candlestick patterns, but just that it has a number of videos, right? Many of them. And then everything was not captured in one video, right? So learning it, you have to take your time, especially when you have to understand the anatomy and the psychology behind that candlestick pattern formation, right? So in this video, especially on candlestick patterns, everything has been summarized and made easier. So I will call it edition what? Edition 2. So that is it. Now on chart patterns, this is special. Now, besides the candlestick patterns that we trade, right, we also have chart patterns. Now, the chart patterns is made up of the candlestick patterns. You understand? So that is it. So you have to understand that. Now, what are chart patterns? Chart patterns is just an arrangement of special candlestick patterns in some fashion, right? Special arrangement of candlestick patterns in some fashion. So that is what candlestick is all about. So now the first aspect that we look at is what? The reversal candlestick patterns. When we say reversals, it means that the formation of that candlestick pattern brings about reversal. Reversal means if there's an uptrend already, right, a current uptrend, then in the future, there's going to be a reverse of that pattern. So if it was bullish, now the candlestick has a higher tendency of what? Reversing or being bearish or being in a downtrend. So the opposite, it just true. You understand? So that's reverse candlestick patterns. Now, they give you the what? The candlestick chart, right? Formation, and then they'll give you how to trade them, right? They'll give you the pattern, usually on the left, right? And then the example or the how to trade them is on the right. You understand? So we have what? The double form of them. You have the triple form of them, and then there's another type of it. So the first type is what? doubles. So in the doubles, you have double top, we have double bottom. So the double bottom being the first one, it means that there was what? Initially an uptrend, right? An uptrend, and then being supported with what? Something called consolidation or resistance and support. Price moved from the bottom and then move past what? A resistance, got to a second resistance, and it was rejected. Sorry, was rejected twice. So when it was rejected twice, then the opposite, or the notion is that the candle or the price is what? Is bound to what? Move down massively. You understand? So that is double top. Double top means that price got resisted twice at the resistance level. That is what it means. It's as simple as that. So how to trade them is what? On the right. Price moving this way, got here, the first top, came down to the support level, got to the what? The resistance level again. So the focus is on where they were resisted in terms of what? The double top. And then you see the massive move down. That is it. So that is not money. The support level, we call it what? The neckline. So that is it. So the same thing happens in what? The opposite, rather, happens in what? The double bottom. Means that price was from the top, got resisted, or wait, got supported. Let me put it that way. Yes, for you to understand it conveniently. Got supported or rejected twice at the support line. So it's double. Got stopped or rejected twice. That is it. And then when it happens that way, there's a massive what? Rallying up or gap up. So they have to trade them. This is what's happening. You see what is happening here? What's here? What's here? That is it. So we can see that the shape in terms of the double top and the double down is just a matter of M and W. So if you have been with me for a long time, I trade with what? Shapes. Instead of getting the names and get you confused, shapes are graphical representations, right? They are easy to remember, right? And they're easy to teach. So I deal with them in terms of what? The shapes, right? I don't fancy the names, the technical names. Of course, I am trying to get them to memory because I'm now a tutor or a mentor. So you see, some of these things I have to remain professional and then give you the terms. But for me, when I'm trading on my charts, you know me, I do things simple. So the M and then W. The M is the double top, the W is the double what? Bottom. That's how I trade. So the same thing applies in the what? Triple top. The triple top means that price got resisted twice at the top, sorry, thrice, 3 times at the top, and then there's a massive move down. You understand? So it's just a matter of what? Gauging and then trading it. So it means that if you want to trade this, you can enter at this level and then you enjoy what? Massively. It means that from the beginning, you may not have realized that. You understand? So on the third point, on the third resistance level, you will catch it, or you may catch it and then you trade it. So it's the same thing. So you see how it is traded here, right? You understand? The same thing. It's as simple. There's no complications here. Don't worry yourself with too many lines, too many tools, too many technical indicators, too many analysis. Just be watching out. It's just another simple strategy, right? Instead of learning too many strategies, just choose at most maybe 3 or 4, right? So that is what you look out for. You look out in the market when you wake up in the morning, or in fact in the week, during the week, at the higher time frame, you just look at it and then you drill it down, you tailor it down to the smaller time frames. It's as simple as that. Don't complicate things. Just keep it as simple as it should be. You understand? So that is it. So the triple top is the same way. Now there's another term that many people have different names. We have the head and shoulders. Other people have some fancy names, right? Yeah, people have different names. In this trading journey, is how you are able to what? Memorize this or remember things. That's the most important thing, right? Keep things personal. Yes, so that is it. So we have head and shoulder. So this is how it happens. The head and shoulder, it means that price move from maybe price begin to what? Move up. They move up first, they go resisted, comes down to some support level, then they move up again, this time higher than the first one, then they come down, then they move up to the same level as the first one, right? So you see that the second level was the higher, and then we come down and then move down. So this is how it is. You can catch this and trade it. So as an example is here. You see how it moves. It's as simple as, don't try and complicate things. It's as simple as that. So usually all the patterns, all the chart patterns have the reverse form, right? In fact, almost all the chart patterns have the reverse form. If you're able to catch one, the other one is easy to what? Understand or memorize. So that is it. Try and get the first aspect of them, and then the opposite will be true. Now, the inverted head and shoulders. So it's the same thing. This time, it's just the opposite. So it's inverted. When you say inverted, something that is turned upside down. So head and shoulders, you see, the same way. So please pause the video, take screenshots, because I'm going to scroll through them easily. Now, let's come to continuation patterns. What we have just treated is reversal patterns. Reversal, I told you, price, if they were initially in an uptrend, now there's a higher tendency of them moving the opposite direction in the future, right? Now we have continuation patterns. Now, continuation patterns is, what it means is that if price were moving, let's say upward, right? Now there's going to be only a pause or a pullback or retracement, and then they will continue moving in the same direction that they were moving. So moving up, right? Moving up, there's a breathing or a pause. They pull back a bit, not coming back to the level that they started. Pull back a bit, breathing, and then they move up. So that's what we call continuation patterns. So in the opposite way, if price were moving down, right? They move down, they pull back a bit, or pull up a bit, because they were moving down, pull up a bit, not back to the same level, then they continue. So that's what we call continuation patterns. There's only a break, a consolidation, right? A breath, a retracement, a pullback, or a consolidation, and then they continue. That is how they move. So the first one is bearish rectangular. This normally happens. Most of them are in consolidation, right? I told you one of my strategies is for consolidation. I love consolidations because when they break out, the movement is very momentum, very massive, right? So the first one is rectangular. The rectangular consolidation can be as long as they can take, right? You see this movement, 1, 2, 3, 4, 5, 6, then down. So what it means is that price began from the top because it's bearish, began from the top, consolidated for a number of times, and then they move down sharply. That is what happens. So the trading style, this is how it begins, or this is how it is. So here, up, down, up, room, move down. There's a breakout. The same thing goes with what? Bullish rectangular. Bullish means, we know what bullish means. Price moving from the bottom and then moving up. So initially, what they move from the down or the bottom, as you see, and then a number of consolidations, then they break out massively. This is the what? The trading style. Then we have descending triangle. Now, don't worry. Now, the important thing here is you looking out for this charts, graphical representation, because charts are graphical representation of what? Prices or price actions or prices of what? Instruments. What most of, in fact, what price analysts or technical analyst traders, in fact, traders trade is what? Chart patterns, right? And that's the most important aspect of what? The three arms of what? Or branches of what? Trading, right? The psychological, we have the risk, and then we have what? The technical, you understand? So that is it. So you have to capture this, at least keep them to memory. We have the descending what? Triangle. Descending means, you understand, descending means price were from the top. Then there's a consolidation up and down. But this time they are being kept within some form of a triangle. You know what is a triangle, right? So price does not move up too much towards the initial level, but they are being streamlined within some boundary or channel, right? But this channel is rectangular in shape. So this is what happens. So they move down, then they break out. I will explain this in the video, the pending video, right? The financial introduction to the financial market. or the financial literacy, you appreciate it more. But for the meantime, please have screenshot of this. It will help you in a long way. So this is how they are traded, right? The same way they are traded. Then we have the ascending. It's just the opposite. Just look at them graphically. Look at it ascending. Now we have something. What the second thing is what is the bearish flag. You know what? How flag are. So we have the bearish flag. We have the bullish flag. Sorry. So flag, bearish for that matter, it means that bearish means they were initial from the top. That's what any bearish. If you see any bearish, the keyword bearish in any of the patterns, it means that the prices were moved from the top initially, and then now there will be a pause or pullback or whatever, and then they will continue. So that is it. So this is what is happening. You see, down, and then some kind of consolidation. But this consolidation is a slanted what? Upward consolidation. Then they will break out. This is how it is traded. The same thing goes for the bullish, right? Just the opposite. Now there's another important chart that most of the traders they know, and then yet they have different names for them. You just have to what? Have the graphical. The reason I'm more focused on the graphical representation is that there are many a time people use these fancy names, and then when you're among them, you get confused, right? And the only time you may even, or the time you may even find out that this is what they're actually talking about, but then and they are far gone, and you are just confused. In fact, a lot of traders or senior traders, so-called, they try to make the trading difficult, give them some fancy names just to make it look like trading is difficult. Of course, trading is difficult in quotes, but there are ways to what to learn them in the easy way. You understand? So we have the cup handle. In the same way, you know how the shape of a cup. You know the shape of a cup. It's not different. The name is just an eponym. You understand? It's just an eponym. Second from the word, the shape of a cup. So this is how it is, right? This parabolic in shape, right? From the top, they move down. Then there's a small consolidation in the form of the handle. Then there's a sharp breakout. So that is it. I hope you get that idea. Now there's inverted form of that, what? The cup. If you turn the cup upside down, you understand, from the bottom, parabolic, and then you understand, and then there's a break down, right? This is break up, now break down. Now let's look at another important aspect, another important chart pattern. We have the bearish pennant, right? Bearish pennant. This is how it is. Bearish price move from the top. You just have to look at the shape. Have the shape in mind, right? Now, let me also draw another attention. Upon all this that I'm talking about, if you don't know, if you don't have the ability to draw or put tools, mark out some lines or all this is on your chart, this may sound easy, yet very difficult for you. You should be able to draw your resistance level, support level, do your trend lines. You understand the trend lines. These are the basic things that you have to know. If you don't know these things, drawing this may be difficult because you looking at the charts, right? At a first glance, it will be very difficult for you to see these things. Now, this looks easy here because the lines have been drawn already. So it's easy for you to what? Fish them out. But here is the case, you open your chart. There's no chart, there's no tools, no markings on them. This may be difficult, right? So just look at them. And then yet, if you can't wait, please check what? The intermediate playlist, right? It's very important. It will go a long way. So do that. If you don't know that, please watch them and then come here. If you can still go ahead and then learn this, it's okay, right? We have different learning abilities. So that is it. So the bearish pennant, this is how it is. Yeah, in the form of convergence, right? Two lines meeting at a point, right? Convergence, yes. But this time price is also moving from the top, like I said, bearish. And then you understand. So that is it. Then the bullish also is just the opposite. So now let's move to the last but not the least. Yeah, and that is what? Neutral or bilateral patterns. Neutral means, you know, if something is neutral, it's neither positive or negative. It's not, and then when it comes to trading or chart or candlesticks, it means that it is neither bullish or neither bearish, neither uptrend or neither what downtrend. You understand? So that is, and then when it comes to when you say bilateral, bilateral means two directions. You understand? So two ways, two directions. It means that what in simple term, it means that when these patterns form, they have the high tendency of moving in any position, in any direction, right? So it means that buyers could take over the market, could take control over the market within the twinkling of an eye, or sellers could do that because we are at equilibrium. You understand? We are at equilibrium where no one is in charge of the market. So the slightest volume from either of the parties would result in that direction, massive direction of the market. Sorry, the market. You understand? Of the market. So that is it. So now we look at what's symmetrical. You understand? So when they converge at one point, anything can happen, upward direction or downward direction. That's how it is traded. Now we have the rising wedge. You understand? So price moving from this way, right? Then there's what? There's a convergence, upward convergence, right? Rising. Upward meeting of what? The prices, meeting of the trend lines. So they meet at what? At the point, and then finally there's a break downward. You understand? So this is how it is traded. Then we have the falling wedge. The falling wedge, right? It means that price from the top. You understand? Yes. And then either way, because the direction, the arrows are either ways, and then they move that sense. And then price what breaks up. So this is how it is. So I tried as much as possible not to take too much of the time in this video, because the important thing here is for you to what? Get screenshots of these screens. Save them on your phones, in your gallery, in your photos, and then on your wallpaper, your slideshows and whatever. Try this. Let them be. I did this for myself. This is what I'm saying because I did it and it really worked for me. I did a saving. Yeah, wallpapers and all that. So anytime I see them, right, there's a memory. There's what? Learning. So I see them, I remember. I see them, I keep the memory. So I did that until I have all these patterns of head. The thing is that I may not remember the names, right? But when I see them, I know what it means or what it has on the market in the future. I hope you understand me. So that is it. So I decided to do this in a simple video for you. Take screenshots, learn. Without this thing, it will be very difficult for you to trade easily. As CMG promised you from the beginning of the year, we promise to keep things as easy and as simple as we can, just to help the newbies or the intermediate, in fact, the advanced. Most of the advanced do not have this. I'm telling you, most of the advanced do not know this. They just trade, right? They have a way of doing that, but they do not know this. So please learn this, and then see you next time in the next videos. Thank you very much. Bye for now.